Good morning, everyone. I think we're getting people in and we're going to let some folks join. We're recording, so we'll let a few more folks in before we get going here.
Good morning, Sherry. I'm here.
Ron. I know you've been busy getting all this great data together for us, so I know I'm looking forward to hearing what you have to share.
Well, I'm looking forward to hearing it too. Yeah, this data is so new. Obviously, we're trying to capture all of the June data, and of course, all of realtors across South Florida don't input all of their closings as quickly as sometimes we would like, but we've waited now for a few days past the end of June to gather this information. So I think we'll all be pleased with how much we had to look at. Lee Casey's been a huge help in gathering all this and sorting it out so we can see it on the screen. And we're going to try to move quickly through this. We're not going to be able to touch on every market, but we're going to give you all this information later this afternoon. We'll email it out to you so you'll have copies of it that you can then go at your own pace and look at over the next days. And then we'll be publishing also again our insight report, which will be out sometime later, before the end of the month. So, but you're going to have all the data that you're really going to need here this morning. Okay, Sherry, you want to get started now?
Yeah, let's go ahead. We've got already a nice group that joined us. And so good morning, everyone. I'm Sherry Porter, Senior Vice President and General Sales Manager with Berkshire Hathaway HomeServices, EWM Realty. It's great to be together, even virtually, and I'm excited that you're joining us this morning for our Q2 market update with Ron Shuffield, our president. Can you believe we're already at the halfway mark in 2021? And with our newly June numbers in, we've got a lot to cover in our time together. Ron will be unpacking and giving us insight into the second quarter. And as you know, he's our go-to source. He's been featured, his comments in the Wall Street Journal, the New York Times, Forbes, CNBC, the Miami Herald, the Real Deal, and many more. I know you're curious as I am, if we're going to continue to see this pace. Is it going to slow down? Will inventories start to increase? What markets have grown? What's going on in the condo market? So before we get going, just so you know, we are recording and we'll send this back out, and I'll be monitoring the chat. So if anybody has any questions along the way, we'll definitely be answering those and anything at the end. And so Ron, I'm going to turn it over to you so we can get started.
Okay, Sherry, thank you. Thank all of you for being here this morning. We're going to move pretty quickly through this. A lot of numbers. I want to start with this first page here and just let you see what we're going to cover. Obviously, interest rates on the left, effect of the interest rates on our market, tax map showing how favorably we compare with the rest of the country in state income taxes, no income taxes in Florida, the migration map, how many people are moving to our area and what states are losing population. The overall market in Dade and Broward counties. And the rental market is something that we're now talking a lot more about because rentals are becoming scarce. And then we're going to look at historical graphs. And as you see the historical graphs, we have market reports by price, this box in the center here. So those are, you'll be able to see by price range, how those markets have been affected this year with this enormous amount of business that we've all been experiencing. And then reports by our different cities. When you get this report here later today, you'll see that these cities are all in alphabetical order. So when you get into that, you might have to click through a few pages to get to where you want to be, but just know that all of this is in alphabetical order, and this is the format that we're going to follow this morning. So the first comment, I guess, is interest rates. If you haven't been in this business but a few years, many of you were still in school back in '81, but probably most of you were still in school back in '81. But 18.63% was the interest rate at the time. Hard to believe that we were closing home mortgages for 18% interest, but people were doing that. In January of '95, just whatever that was, 14 years later, the interest rates dropped in half, which we thought was great, 9% interest rates. And then they continued to decline, 4.71, and then in January of this year, 2.65. We've seen a little bit of an uptick. This past month, at the end of the month, interest rates average across America was 3.02%. So still very, very favorable market for buying a home, borrowing money. So I think that what we're going to continue to see are low rates for some point into the future, but eventually these rates will increase. And so we try to talk about that with all of our buyers. And as this little graph here shows, and all of you have access to this already in my EWM, but on a typical loan of $500,000, that mortgage payment is $2,108 a month. The principal and interest payment is $2,108 a month. If the rate goes up to 3.125, and as we just looked there a minute ago, it's inching up slowly. But if the rate goes up a full 1% to 4%, you see on the left column your lost borrowing power. This is a pretty simple graph, but it really does point a great picture of what waiting can do to your monthly payment. So many people borrow exactly what they can afford. So they're approved to borrow $500,000 and the rate is 3% today, $2,108 principal and interest. But if they decide, well, I'm just going to wait, maybe prices will come down, whatever, and then the rate goes up to 4%, you lose 11.7% of your borrowing power. So you will not be able to borrow any longer $500,000. You would only be able to borrow $441,548. I love all the technology we have today to help us just to zero in on these numbers in just a matter of seconds. But as you see there, if the rate goes up to 4%, you're still only qualified to borrow $500,000 at that monthly payment. Then you would be looking then at a home that's $58,000 less than you could buy today. So that's not that complicated, but this is one of the reasons that our market has been so strong, not just here, but across the country this past year. And the tax factor, obviously, we looked at this before, but there are 7 states in the United States that do not have a state income tax, all those green states. And of course, the two you hear a lot about are Florida and Texas. These are the 2 fastest growing states. As you look at some of these taxes in California, for instance, at 13.3%, these are all based on the highest tax on a graduated tax program that most states have, similar to our federal taxes. But out of everyone's income that they earn in those states, you see those percentages. This is the additional money that they pay their governments for government services that they receive in their state. But of course, in Florida, we don't pay any of that. So when someone is living in New York paying 8.82%, if you live in the city, in many cases, there's another 4 or 5% there. So they're also paying 13% of their income additionally. And in Florida, you don't pay that. So another huge motivation for people to move here. And then you say, well, who is moving? Well, all of these states that are colored in blue have lost population this past year. And the ones that are in gold or green have gained population. The green states have gained the most. And of course, as you see, the states that have the hatched lines across do not have an income tax, and those are the ones that are growing the most, which is part of the reason, not the only reason. Obviously, people come to South Florida, come to all of Florida because of our weather and just the quality of life that we have here. But this is a major impact for people, a positive impact by moving out of states that charge higher taxes. And of course, all these blue states, these are U.S. Census numbers. These states, like New York, is losing 346 people a day. Florida is gaining 661 people a day. So a significant reason why we are seeing such demand on our real estate. Now we say, okay, where are we today? This article came out last Friday, July the 16th. This is Mansion Global. I know all of you read this. This is probably the most read real estate section of a newspaper in the country right now. We know that we certainly get information at a local level, but on a national level, the Wall Street Journal publishes this section every Friday. And their front page story last week was a slowing market finally. And as you get into this article, it's not a negative article, and we'll send this to you as well, so you can see the reasons why the market increases are beginning to slow a little bit, and I say very little bit. You'll see in the graphs in a minute. The reason that's happening is because we're finally getting some more inventory. We have been so short of inventory across the country, a smaller supply of inventory than we've had maybe since we've been keeping records, where inventories are less than a month of supply. And as you remember from all of our conversations over the years, everyone in our industry agrees that 6 to 9 months of supply in the under $1 million market is an optimum market. And now we've been dealing with much smaller numbers of months of supply for some time now. And a lot of that goes back to the recession that we came out of in 9, 10. And as we began moving out of the recession, there was great demand on housing. Interest rates were lower, people were buying, but we were not building as much new housing at that time. It just took industry a while to kind of get rebuilt after the recession. So we're still very short on the number of homes. But this fact that was headlined last week is something that we've been watching for the last 30, 60 days. And it's not a negative, it's really a positive that we're getting more inventory, so more people will be able to buy. But the increases in the median price, we believe, will probably settle somewhat here over the months ahead. So the overall market, this is Miami-Dade County. Sometimes I just want to look at these graphs because you don't really have to look at the numbers too much. You can just see the picture in this graph. This is a 3-year look. So this was June of 18 and then June of 21. So over this 3-year period, our inventory, this is this tall green bar, these tall green bars here. This is the inventory. You just see how it's just dropping. And we've been talking about this all year. The darker green bars are the rate of sales or the number of sales. And to kind of bring this into focus a little more, in box 3 here at the bottom, you'll see that a year ago, there were 15,057 single-family homes on the market in Miami-Dade County priced under $1 million. This morning, we have 8,039, or actually this was at the end of June. So we've had a 46% increase in the 46% decrease in the number of listings available for people to purchase in Miami-Dade County under $1 million. And then you look at the number of sales that we've been making. This is comparing April, May, June of this year to April, May, June of 2020. Our sales are up 109%. Last year, during that 3-month period, there were 4,736 homes sold in Dade County under $1 million. And this year we've sold 9,895. Now, because we were a little concerned about comparing 21 to 20, because as you remember, last year, April, May, and June was the height of the pandemic. Most of our country was shut down. So we felt like it was probably wise to go back and look at 2 years ago as well. So this is 1 year ago. Now you slide over to box 6. And this is the comparison of the 21 sales to the 19 sales. But even in that period, a 28% increase over what would have been considered a more normal year in 19 before we had ever even heard of the pandemic. And so the inventory is down from that year 53%. So so much of our business, all of our business is driven by supply and demand. And when the demand is increasing, like we've been experiencing for the last almost 2 years now, when the demand is increasing at that rate and the supply is decreasing, you're going to have some significant appreciation. Now, over $1 million, you see this graph, very similar to what we saw in the under $1 million, but it's beginning to level off. You see out here in these last couple of months, this is May and June, the inventories are basically the same. And we'll see in some of these other graphs where we're starting to see the inventory increase. But in the over $1 million market, this is really where the big story has been. Increase in sales this year over last year for the second quarter of 2021 versus 2020, up 441%. Staggering numbers. Inventory is down 35%. And you look over at 19, you think, well, maybe this was just an anomaly for 2020. But if we compare it to the 2019 period, still a 236% increase in the number of sales. The $1 million properties a year ago in Miami-Dade County represented 1 of every 13 sales we were making as an industry. Today, $1 million sales represent 1 of every 5 sales we're making, one of every 5 single-family sales that we're making within the industry. And this is not just our company, but the entire industry. So enormous focus on the higher end, and a lot of that is coming, as we all know, from more affluent people that are moving into the state. So the wealth that's coming here is pretty amazing, and of course we're seeing that showing up now in a lot of homes, not just over $1 million, but over $5 million, over $10 million, over $20 million. So we'll see some of those numbers in a minute too. Condominium sales. We were worried about condominiums for a while when condos were shut down, and the owners, had to share the elevators and closing down the pools and all the common areas in these buildings. And for a while, but very short while, 2 or 3 months, people say, "Oh, I don't want to see a condo. I don't want to live in a condo." But that certainly has gone away now. Great interest in buying condos. Some of our condo values are the best in the country, for what you get, quality of life and the size of the units and the newness of the units. So what we're seeing now is just really a surge of people buying condos. These are condos under $1 million. And I'll draw you back to box 3 again. As you see, the inventory is down 46%. Sales are up 200% over this last quarter compared to last year. Pending sales are up 156%. These are all waiting to close sometime probably in the next 30 days. And then you compare that over to box 6, still, even comparing to a more normal year that didn't have low sales like we had in the second quarter of 2020, still see over here a 59% increase in sales. So these are condominiums under $1 million, but look at these numbers. Condominiums over $1 million, sales are up, I don't even know how to say this, 625%. So a year ago in the second quarter in all of Miami-Dade County, there were 127 sales of condos over $1 million. This year we've had almost 1,000. And if you go back to 19 comparison, it's still a 241% increase. And then back up to the graph, as you see, the inventories have been coming down, down, down. You don't really see this beginning to turn up yet, but it will at some point here in the next few months. Single family home sales in Broward County under $1 million. Now that you kind of see how this works, box 3 again, inventories are down 52% and sales are up 49%. And then in the 2019 comparison, sales are actually down a little bit, so 2%. So this is why we want to do this comparison, so we don't give sellers the belief that everything is going to continue at a 50% increase in sales each year over year. This percentage, this past quarter, for the second quarter of 2021, is very high percentage because we're comparing it to last year, which was the quarter where the pandemic was having the most impact on sales. So this is single family homes under $1 million in Broward County. This is single family homes over $1 million in Broward County. And again, you see these triple digit numbers, 280% increase in sales in compared to 2019, 203% increase in sales. The reason that you saw the sales under $1 million in Broward looking a little lower than, quite a bit lower than this, is because the inventory availability at that level is much lower. We're going to see another chart here in a minute, just a month's of supply and how critically low Broward County is in supply. Okay, then this is, let's see here, where was I? This is condo, okay, I'm sorry, I skipped over that. This is condominiums under $1 million. As you see again, sales are up 131% this year compared to the last year, and they're up 31% compared to 2019. And then these are condominiums over $1 million in Broward County. Again, triple digit increases, 368% increases compared to last year, still a 202% increase compared to the year before. Okay, the rental market. I tell you, the only thing that I don't like about these when I can't talk to anybody is that I'm sure many of you have questions. If you have questions, type them in to Sherry, and then she can ask them here in a few minutes. Rental market is something that has kind of caught us all by surprise as well. The rental market inventory, these are single family homes, all price ranges in Miami-Dade County. The inventory has decreased from 965 properties on the market a year ago. This is again box 3. And this year only 358. So we only have 358 single family homes in the MLS this morning for people to look at in Miami-Dade County. We are taking a lot of new listings, 653, but we're actually, and this says sold, but this should say rented. We actually rented 940 properties in the last 3 months. We listed 653 during the month. So as you see, we're out renting the number that are coming in by a large margin. So the number of rentals are down because we just don't have as many opportunities for people to rent at the prices where they need to rent. So again, this picture, this graph shows very clearly why it's been hard for you probably to find rentals for your customers, because as you look at April, May of last year, inventories just continue to drop until we just hardly have any left, 358 now. Now these are all price ranges of homes for rent in Dade County. These are the prices per square foot. This is pretty amazing also. As you look at box 3 again, we've seen a 40% increase in the average price per square foot. These are dollars per square foot per month. You see at the bottom, $2.43 per square foot per month. This is what the average was for April, May, and June for rentals. A year ago, it was $1.73 a month. With apartment buildings, new apartment buildings, most of these units, as you know, in the MLS are individual condo owners where we're renting these for them. But it's a large sample, so it tells us what's happening in the market. But then, if you look at the traditional apartment buildings where they have 200, 300 units in a new building, they're looking for this number to be somewhere in the $3 plus, $3.50 plus per square foot per month. But as you see, we've had a 40% increase in the price per square foot. Doesn't mean that every rental has gone up 40%. But we have seen significant increases in the number in the gross rent for a 1-bedroom, 2-bedroom apartment. But what this really reflects more than anything is that we're renting more expensive apartments. The more expensive apartments than we were a year ago. If you look back 2 years ago, it's 58% increase. Again, you just have to look at the graph here to see how this increase has actually started long before COVID. We were back out here and at the end of 19 starting to see increases. So these are the average price per square foot for single family homes in Dade County. And then this is the real story though. This is the months of supply. And we all know that again, 6 to 9 months of supply is what we want to see as an optimum number of months of supply. Again, back to the third box, this is the last quarter last year, 1.2 months of supply. We would like to see that number at 6 to 9 months. A year ago, it was only at 2.8 months. So when these numbers start getting down to 1% or 1 month, you'll see in some more slides where it's actually below 1 month now. It's into the weeks and days of market availability. So this is what will continue to keep pressure on pricing. It's certainly not been uncommon these last months to hear in Brickell, for instance, where we have a large population of newer units, where 1-bedroom apartment increases have been $500 and $600 per month. So I think it's certainly been a time that investors have been waiting for. As you again know, in the condominiums across Miami-Dade County, less than 50%, even about 35 to 40% of the units are being lived in by their owners. So we have a large number of investors that own most of the condominiums in Dade County. So this is very good news for them that the inventory is so low. Now, of course, we're starting to talk about building more condominiums, which will add some to that inventory, but that's going to take a while to build these new buildings. And the next slide is the condominium rentals. Those were single family homes, and I've been talking about condos now, but this gives you a good picture of what that looks like. You know, and it shows it is sold, but the number of units that we're renting in condos are up 40%, and inventory is down 77%. So when you have inventory going down 77%, the sales going up 40%, and the number of new listings coming in at something less than half of what we're listing every month, it's just going to continue to put more pressure on rentals. At the same time this is happening, the reason some of our inventory is lower is that these investors have decided that I've had this unit for 10 years, 15 years in some cases, even single family homes, and they're coming to us and saying, okay, let's tell the tenant who's been with me for 3 years that I'm going to sell the unit now, and I'm not going to renew his lease or her lease. And so I think that that's adding more pressure to this. So for many of our tenants who have been renting and very happy to be renting, they can afford, many of those people can afford to buy. This is the time to talk to them about buying the unit either that they're in or another unit in their building. We're seeing a lot of movement like that going on right now. And with rates as low as they are, I mean, we can pre-qualify people through our Prosperity Home Mortgage Company, and our representatives from Prosperity are right there in your offices. They will pre-qualify any of your potential buyers for no charge. And it's not just a glance at their credit. This is a full qualification. All they have to do is identify the unit that they want to buy, and they'll already be pre-qualified to do that. So just remember that it's going to be more pressure on tenants today to maintain the same unit they've been living in for a few years, because many of these owners of these units are now seeing these same numbers and they're thinking this is the time to sell. So these are condominium rentals at all prices in Dade County. The average price per square foot. Now these are, we talked about single family homes being $2.43 a square foot. Condos now, the average price per square foot per month is $3.58, which has been a healthy number for a while, but many of these units are newer. And again, these numbers don't necessarily reflect that every unit has gone up 14% in rent, but it does show that what we're renting are the more expensive units. Okay. Months of supply, again, 1.2 months. You're going to continue to see those low numbers of months of supply throughout everything that we're looking at this morning. In Broward County, very, very similar. This is single family homes. The number of rentals that are happening every month are down because we just don't have enough inventory to satisfy the demand. Prices have gone up, which has kind of turned some people away from renting and moving back to buying. So, but there's still, if you want to rent an apartment and it's fairly priced, it will rent quickly. Broward County average price per square foot, lower than Dade County. These are for single family homes, $1.83 square foot versus $1.48, but still a 23.6% increase from a year ago. Broward's months of supply, very similar, 1.2 months of supply. We've seen that throughout single family and condos in Dade County, and now we're seeing it in Broward County as well. These are condominium rentals. Now here, because we had more supply, we do see a higher number of rentals, 28% increase over what we were doing last year. And again, I'm still talking off of box 3 here, but you still see that these graphs, in fact, the Broward graphs are probably even more dramatic, and it was a more dramatic fall off after recession, because so many of these units have either been sold now or the rental market has been so tight that we've rented them. Broward County average price per square foot on a condo, $3.98 a square foot. Boy, I look at that $5.59 a year ago. That's suspicious to me. I don't know why it's that high, but it could be that particular period is when they were renting a lot of the more expensive condominiums in Broward. It has to be the reason, because I don't see that we've actually decreased. I think we just kind of hit a spike last year. And then the year before we were at $5.04. So there were some expensive units being rented in Broward at that period. In Broward County condominiums, all prices, 1.4 months of supply. Okay, this graph here is my favorite graph of everything that we're looking at. If you can't look at anything else but this one graph, this kind of tells the whole story. So this goes back 15 years. So 2006, and we've arranged this by quarter. So each one of these vertical bars represents a quarter. So in 2006, this was the first quarter, second quarter, third quarter, fourth quarter. And then as we get into the recession, this shaded area is the recession, which lasted about a year and a half. I mean, obviously, some would say it lasted longer than that, but this is the period where we saw the severe impact on our real estate. And this skinny little line here, somebody told me this looks like an EKG from your cardiologist, because it makes everybody nervous to see this. But this is the median price, and you see as it moves and moves and moves, and of course in here a lot of movement. But what we experienced after the recession is that before we went into the recession, the median price of a single family house in Dade County was $373,000. And then as soon as we got into the recession, everything just stopped. Sales dropped in half for a few, or for about a year, almost 2 years. We saw half the sales that we had been making. And then we saw the inventories begin to increase. So again, these vertical bars are the number of months of supply, and those are over here on the left. So this is 10 months, 15 months, 20 months, and so forth. So we know that we want to be down here in the 6 to 9 months someplace. So this is the optimum range, is right across through there. But here during the recession, we were up to 40 months of supply. This is 3.5 years of supply almost. And so we stayed there until the prices started coming down. The only thing that dropped this inventory was the fact that we had a 50% off sale of our real estate across South Florida. And we were literally selling condominiums on Brickell Avenue that we had sold back here in the pre-recession period. We had been selling here at about $385 a square foot on the average in Brickell. And we literally, from in the spring of 09, which is right in this period in here, we started seeing prices drop in half. And when the prices in that Brickell example from $385 moved down to $190 a square foot, and buyers started coming from everywhere to buy. And then as the prices dropped, the inventory also dropped. And so we hit this leveling off period in 09 and 10, finally hit a bottom at $165,000 was the median price. And so that median price then started growing after this period, 11, 12, 13, 14, 15, all the way through. And now we're up to 2020, and this shaded area here is the pandemic. And so when we first went into the pandemic, I think we were all expecting to see a similar graph that we had seen during the recession when everything was going to fall off a cliff. But quite the contrary. We just had this spike, almost a straight up move in the median price. So from March of 21, we've gone from $373,000 median price for a single family home in Dade County to this morning, $505,000. So the under $500,000 market 5 years ago used to represent 56% of all of our sales. Today, it only represents 10% of all of our sales in single family homes. So those numbers are very real. This is what our buyers today are finding when they go out to look. I said earlier in Dade County, in the under $1 million market, a year ago, the over $1 million market, a year ago, 1 of every 13 sales we were making in Miami-Dade County was over $1 million. Today, 1 of every 5 we're making is over $1 million. So that means that 20% of our sales are now over $1 million. So for people that are on a tighter budget, this is getting much more difficult to find a home in that under $1 million market. So again, I've spent a lot of time on this graph. This axis is the number of months of supply. On the right is the median price, $500,000 for this current price, $505,000. And then we look at condos, the next slide, and you'll see there that we hit a $265,000 median price during the recession. That fell, falling like a rock is no understatement. $112,000 was the median price of a condominium in Miami-Dade County in 2010. And today, that same condo is now median price $330,000. So in this period of time, we've had this kind of growth, and it really has not let up. So this is the big question today. How much further will this go? Will we have another event that causes this severe drop? You know, I don't think we're going to see this drop because we don't have enough inventory. If we had a lot of inventory like we had here, then that's a different story. But look what's happening to the inventory over here on the right. All this inventory during the pandemic has continued to get smaller and smaller and smaller. Now, our developers are out, working as quickly as they can to start building again. And there will be demand for more condominiums. Certainly didn't think about making that statement a year and a half ago, but now that we see that this inventory is being absorbed, the good news too is that more owner occupants are buying our condominiums now than ever before. We're going to have buildings that will be better managed because you'll have more owners living in the buildings. We still have many buildings in the Brickell area and others where 10% or less of the building owners are living in the building. Well, you contrast that to other buildings where, Santa Maria and some of those established buildings where you have 50% or more of the owners living in the building. You just have people taking care of their properties better when they're there every day living in the building. So I think that that's something that we're going to see going forward as well. So again, this graph, kind of want to stay here all morning because there's a lot to glean from this graph.
Ron.
Yes.
Oh, I'm sorry. I didn't want to interrupt you, but there are a couple of questions that probably center around this.
Okay.
One was the increase in construction costs. How is that going to impact the prices and market for new construction?
Yes, new construction always helps raise the pricing for everyone. New construction prices will definitely be more. Before the recession, common price was $400 a square foot. And then after the recession, we started seeing the new buildings coming out, in the $500 a square foot and then $600 a square foot. And I mean, some of the new construction that's being discussed right now, this is more luxury construction, but not on the ocean construction. I mean, this is downtown. They're bumping close to $1,000 a foot for some of their quoted prices. And then when you say, well, that's crazy. I mean, who's paying $1,000 a square foot? It's beginning to happen. The Four Seasons on Brickell Avenue, we're starting to see sales there now in $1,100, $1,200 a square foot. Not a lot, but we see it starting now across all of the Brickell market. I'm not looking at those numbers right this minute, but I remember that in this last quarter, there were 21 properties sold in that Brickell market over $1 million. And a year ago, there were only about 8 sold over $1 million. So you're seeing many more. I'm sorry, that was over $2 million. Over $2 million, 21 sold, and a year ago, only 8. So you're starting to see many people recognizing the value of these buildings. And our condominium inventory has been seriously undervalued for a long time. I mean, a decade or more. So I think now that especially people coming from other high-priced markets like New York and other cities that, California for sure, Canadians are seeing this as great value. So Sherry answered that question. Yes, higher construction will come with higher prices, and the higher prices for new construction will bring up the value of the older buildings. And none of these buildings are really that old. I mean, 10-year-old buildings still a new building. So, but I definitely think that we'll see higher prices continuing for the condominium market because the demand is there to absorb it.
Okay. Another question along that same line is, how do you think, or how long do you think it might take before new construction begins to catch up with current demand?
Well, to build one of these new buildings is a 2 to 3 year process from the time you start the planning and the permitting and the construction time itself. So, we're going to have a while before we see new condominiums, being available to move into. Single family homes, there's some being built today, a lot of very expensive homes. We sold a home last year on the beach for $50+ million. We've had several this year in the 20, 30 million, $40 million range. Some of those are still yet to close here in the next few weeks. So there's a new there's a new appreciation for our value. You know, value is an interesting concept. I mean, value is simply what a group of people agree something is worth. And I think the fact that the entire world is now focused on our marketplace, you know, everyone sees the value that we have here. At the same time, I say that, you know, people do get weary after a while that, you know, prices just keep going up. And of course, we've had a lot of multiple offers this past year. We're not seeing as many of those. We still have some, but we're not seeing the frenzy that we saw even 2 months ago. And I think the reason is because our inventories begin to increase slightly. And as we see more inventory enter the market, that will temper the prices. But I certainly don't see, you know, any kind of, you know, drastic fall off. I do think after these kind of cycles, and probably more at the very high end than the mid to lower end, we probably will see some settling of price. We might see, you know, a year from now, some of the prices might be a little bit less on the high end, but they will land on a much higher plateau than we have ever been on before. And again, I look at these historical graphs to kind of, you know, develop some thoughts on that. And I think it's pretty clear that that we've had a steady, you know, increase of value here, but we have to look at this per neighborhood, per building as well.
Okay, well, there's a couple of other great questions that are kind of swirling around this topic.
Okay.
One touches on affordable housing and, you know, that issue that with these higher prices. Also, some buyers are hesitant to buy because they're worried this is a bubble. And how would we kind of step into that? And I think you're sort of touched on this a little bit already, but, you know, we had Britt who was touching on that she listened to one of these talks back in 2010, just after the recession, and you finished with this graph or a handout of the business cycle. And the high point is the point of maximum risk in investment or euphoria. And then you had also projected from 2008 to, and you were correct with what you had shared back then. So the question is, what do you project the cycle, or when do you project the cycle to move down? And will it be inflation or interest rate increases that might affect that? So you're kind of talking around, you know, what we're seeing, but if you could maybe weave a little bit of that into what
Sure.
you are thinking
Yeah.
about.
Well, those are all good points. And of course, you know, none of us know exactly what world event's going to happen tomorrow. But I think that the big difference today in the recession was that we had so much oversupply, so much over leveraged financing in the marketplace. You know, we still have a huge number of people who have no mortgages in our market. And I think that that's probably something that has more impact on this than anything, because, you know, people, you know, if prices settle a little bit, you know, people get grumpy. It's like, well, gee, I was hoping to make more on my condo or my home, but they don't go into foreclosure if they have no mortgage. Versus during the recession, even people who could afford to pay the mortgages, the government kind of made it easy. Everybody just turned it back to the bank, and then the banks kind of wilted under the pressure, and then the prices dropped in half, and then we ended up with this graph that we have back here in 08 and 09. As you see, leading into the recession, we saw the inventory growing. I mean, we knew in 06 that something was happening. You know, in 05, we had 3 hurricanes, you know, major hurricanes, Katrina, Wilma, and Rita, and those were all back to back. I mean, people forget that we went through a 65-day period where we didn't have any electricity in Miami for 17 of those 65 days. And that was in 05. So that's been 16 years ago right now where we are. And, but yet, you know, we came out of that, but we came out of that with a lot more inventory. And as that inventory continued to grow, prices ultimately just had to come down. We don't have that problem now. I mean, the inventory is so low, and the demand is higher than it has ever been. You know, our condo sales have been built off the demand from South America for the last 4 decades. And I think that, you know, the nice thing about what we're experiencing now is that we have growth coming from all directions. A lot more permanent buyers are buying these properties today than investors. But at the same time, I say that we still have a growing number of people from South America. I mean, South American buyers have been have been decreasing for the last 5 years. For a lot of reasons. The growth of the US dollar against their currencies has made it more difficult for them to purchase the same purchasing power, and the instabilities in so many of the countries down there. And of course, what's happening now is that, some of those countries in South America are anxious again, and the more affluent people are here buying again right now. And I think we all have been watching that over the last, just this year. And I think that will continue to fuel a lot of our growth and our need for more housing. But I am cautious about, seeing these, 30% increases in median price across the board. I don't think we're going to see that for another year. There will be some people that got a little bit too anxious and probably paid more than they should. But at the same time, inflation is really real estate's friend. I mean, no one wants to see inflation, but it's here, and we're not talking about it a whole lot. But I think that we're going to see by the end of this year that inflation really has had a positive effect on the value of housing. So for people who are waiting, as I tell every young person, just get in the game. I mean, buy whatever you can buy. I know we all, early years, we're thinking, well, gee, I'll just wait. I'll save a little bit more money so I have a bigger down payment. I love the examples where, we have families that bought from us 15, 20 years ago, and now their kids are, entering college, and they're pulling, $300,000 worth of equity out of their homes, which they would have never had they continued renting all those years. And it's pretty much that simple, especially when you live in a place like we live. We're going to get more expensive. I moved here in 1975, and in Coral Gables, which is one of the finest communities here. You could buy many homes in Coral Gables for $65,000 to $75,000 in 1975. Today, we're selling those very same homes. They've been updated and remodeled, but they're the same square footage. We're selling those same homes that we were selling back then for $65,000 to $75,000. We're now selling for $700,000 and $800,000. And will these houses all be worth, $5 million one day? Yeah, probably. I mean, it's just the way inflation works, and of course, we live in a place where everybody wants to be. So that's another huge benefit.
Just a couple of other little things, and I know you have more to your presentation, so you might even be touching on some of this.
Okay.
One question was asking about sea level rise, so that may be coming at some point with your discussion. One was in particular concerning Key Biscayne and what you think might be happening within the next 10 years or so. How many people are moving to Miami a day? I know you've got some great stats usually on that. And then with the people that are coming, do you know how the average income has changed with these relocations from California and New York? And there've been a number of questions too about Surfside. So if you'll just kind of,
okay.
I know you touched on a lot of these things already.
Yeah, well, sea level rise is an interesting phenomenon. No one has ever told me that they're not buying here because of sea level rise. It's certainly something that we're all sensitive to and aware of, and making provisions for. I mean, the remediation activities that are going on throughout South Florida are working to avoid any future problems from that. But at this point, we have properties in the Florida Keys that we're working with now that are into the $15 million plus market, and so people are very confident that that's where they want to be. And of course, after Hurricane Andrew, even that many years ago, 29 years ago, we all thought, oh my goodness, the waterfront properties will never come back because they were 5 feet deep in water. Well, they couldn't get the trucks in fast enough to start cleaning everything out, and now we've seen the beautiful new homes that have been built on the water's edges. And so I don't think that there's probably as much concern about sales. Obviously, we still need to be concerned about, whatever's happening with climate, but I think that it's not affected sales. You gave me a lot of questions there. I know one on Key Biscayne. Key Biscayne had been, to a great part until now, had been a second home market. It was a fun, it is a resort. I drive across that bridge to Key Biscayne and I feel like I'm on vacation every time I go over there. And of course, Vivian and our team at our office on Key Biscayne have had a phenomenal year, not just this year, but many years, but this year in particular, because we're seeing so many families now making it their permanent residence. and I look at downtown Miami and the jobs that are there, the more high-paying jobs in that marketplace. And here, where else in the United States can you drive to a resort to go home every night that's only 7 miles away? You look at New York, and I was reading yesterday in the New York Times, I think, where they were talking about the number of people that are waiting at the helicopter, spot to get their helicopter from the Hamptons back into the city. Well, we don't have to take a helicopter. I mean, I've driven that drive from New York into the Hamptons. I mean, you can be out there for days trying to get home. And so I think that, being able to come out of a major metropolitan downtown area right into your home is just going to continue to drive value and Key Biscayne. And I think that since the incorporation of not only Key Biscayne, but Pinecrest and other communities over this last 25 years has had huge benefit for the communities. Getting the management of these communities down to a smaller group of people where everybody has a village commission, a village council, and again, I could say the same thing for many of our communities that have done that over the years, these last 25 years, to take over the control of their own community. But Key Biscayne has done a wonderful job of that. Chamber of Commerce there is working hand in glove with the city and just the residents. I mean, it's always been a wonderful place, but now it's a wonderful community because the people are there all year long. You asked about what was the other one? You asked about Key Biscayne, and
I also was asking about the number of people coming to Miami.
Oh yeah. When you look at the state's population, I mean, we're the third largest state in the country. We're 22 million plus, and Miami, Broward, and Dade, Miami-Dade, Broward, and Palm Beach represent 30% of the state's population. So we have a little over 6 million people living in just these 3 counties. So, this is a huge, block of buying power. And I think that we're seeing out of these 660 people a day moving here, if you just take the sheer percentages, I mean, 30% of that number is almost 200 people a day just moving to these 3 counties. Well, the demographers tell us that we hardly have, a little more than 1 person per average living unit. A lot of people are single, live by themselves, and so we have a lot of living units. So, I mean, our average number of people in a house is not 2 people, it's something less than 2. So, even if you say it's 2, I mean, that means we need like another 100 homes a day to be delivered just to meet the demand of the new growth that's coming here. So a lot of that is going to continue to be prompted by the number of people moving here. The jobs that are coming here, I serve on the board of the Miami-Dade Beacon Council, and Michael Finney is just doing a wonderful job as the leader there, especially through this pandemic period, to show the world, that we were open for business and that we're friendly to business, and our tax structure is friendly to business. And so a lot of these new companies that are coming here, the first companies that came here, many of them were financial institutions, or not institutions, but financial entities. And it's a lot easier for somebody in the financial world to pick up their laptop and move to Miami or South Florida, Fort Lauderdale, or wherever, to set up their home and their business. If you have a factory, it's a little harder to move. But we are now seeing the tech world growing tremendously. The healthcare community, I mean, we have some of the finest healthcare in the world now, and it's just right here in our community. So, for people who need those services, it's here. So those jobs obviously pay a lot more. And some of these new jobs coming in with these companies, I mean, we've all read in the headlines. I mean, they're double what our median income is, and even more. So I think that that can only benefit us long term, and it just puts more money in the marketplace for people buying food and restaurants and automobiles and on and on and on. So it's just it's an exciting time to be here doing what we're doing, even though it's a stressful time because we're having to still deal with pandemic issues. Of course, for the the median income earner is tough. I don't know any other way around that. Every city has that same problem. Our Florida Realtors Association is trying to work with our legislature right now to preserve more dollars for first-time buyers and for people that are on a more restricted budget. And we have certainly been behind that. In fact, if anybody that's listening on this call, you can sign a petition. Our Florida Realtors is hoping to receive 1 million signatures on a petition that's going on right now throughout the state to encourage our legislators to give more of some of our surtax money that we charge for doc stamps and other things, to let more of that go to our more needed families.
To that point, Ron, Jennifer Woolman actually put a link in the chat that people can click on if you're a registered voter. And if you haven't already done it, you can sign the petition. So
Thank you. Thank you, Jennifer. I should mention that too. I'm so proud of our people because Jennifer is serving this year as the chairman of the Miami-Dade, or the Miami Realtor Association, Miami Association of Realtors. And we're the largest realtor association in the country now, 52,000 members, and Jennifer's leading that whole charge, and along with all the support that she has on her board. But here's somebody who not only is an excellent, successful person in our business, but also giving a whole lot more time than the rest of us, to try to help people all across the state. So anyway, Jennifer, thank you for putting that on the chat so people can download that, sign it, and send it back.
All right. I know we have more questions, but I want you to be able to go ahead and kind of continue forward, and then I'll touch on these as they come up.
Okay. I always talk longer than I have time here, but this, of course, is now market data by price segment for each county. So these graphs are great to share with buyers and sellers. We call, these are our months of supply indicators. So over here on the left, you see that anything that you see in orange under supply is a seller's market. Purple is a buyer's market. You're not going to see maybe one of these in this whole graph. I mean, it's not a buyer's market right now. It's certainly a seller's market. And then the neutral market is where we have a balance of that 6 to 9 months of inventory under $1 million. And 12 to 18 months over $1 million. So I think that again, I'll quickly kind of skim through these so you can see how this works, and then we're going to send this to you later today, so you can then open these up when you have more time to kind of soak in what's here. As you look at the again, there's a lot of numbers here, and we've shown the 2019 numbers, which we'll probably never do this again. But we just felt that it was really important to see the differences in sales and inventories in comparison from 21 to 20 and 21 to 19. So the way these little graphs work, or these are not graphs, but these charts work, is we've seen a 53% decrease in inventory compared to 2020. Seen a 69% decrease in inventory compared to 19. So this is for homes on the market at the end of the second quarter, which was just a couple of weeks ago. Total sales, and these are all homes under $500,000. And the reason that these numbers are not going to be as large as the number of sales is because we're just running out of inventory at that price range. So we've seen an 11% increase in the number of sales over 2020. But then this is, again, a good reason why we're showing this 19, but it's actually 28% less than we were selling in 19. So this market, these numbers, these lower numbers of sales percentage increases, they're less than you're going to see in the higher prices because we just are running out of this price range. The supply in this price range is down to 1.1 months. So under $500,000 market, single family homes in Dade County, we only have 1.1 month of supply. A year ago, we had 3.4 months of supply. The median price has increased 13%. So the median, half are selling for more, half are selling for less, is $390,000. So half of the people in this under $500,000 market are paying more than $390,000, and half are paying less than $390,000. But still, very few numbers of people. When you see the numbers of sales, we had 2,000 sales in that entire market this past period. And now on the right side, this is Broward County, very similar pattern. Numbers may be a little bit different, but this is almost exactly the same in inventory, 832. In Dade County, we had 837, 54% decrease in inventory compared to 19, a 71% decrease in inventory. Total sales were up 20% Compared to 19, though, they were down 23%. And again, it's reflective of the fact that we're just exhausting this under $500,000 market because that's where most of the buyers can afford. Supply is down to 0.8 months. Broward County and most all of these measurements are less supply than Dade County, which reflects the fact that they were not as overbuilt before this started. And of course, now we won't be able to say that anybody's overbuilt because we're selling everything we can sell. And then the median price is $370,000 in this under 500,000 range. Okay, the next one is comparing condominiums. Those are single family homes. So in condos, you see a very similar, except in the sales, we see a triple digit now increase because we had more inventory there. And this is where a lot of people at this price range are now looking, because they've discovered that there's some wonderful opportunities still under $500,000. I mean, you can buy, still a lot of nice condominiums in downtown Coral Gables for under $500,000. Now, they're not going to be maybe as large as a single family home, not as many bedrooms, but this is where a lot of people are buying today because, again, it's so much this is just getting in the game, own something, because, these are not going to be depreciating assets. There will be some adjustments to value as we go through the years, but it's certainly something. It's a long-term investment. It's not like the stock market where we can look at major changes on a daily basis. But once you own a home, most people stay there for 5, 6, 7, 10 years. And as you track back to those charts we were looking at a minute ago, for this last 12 years, we've had a steady stream. You could have thrown a dart anywhere over the last 12 years and made money. And it may not be as the increases will not continue to be at some of these, double-digit increases, but certainly I would expect to see significant increases over time. Okay. That's under 500. This is from 500,000 to $1 million. I'm going to speed this up because we're going to be running. We're already at 11 o'clock here. So this is a 42% decrease in inventory. Broward 47%. And again, look at the sales. 148% increase in sales here. 177% here. Now we're going to the condominium market. 536% increase in sales. These are staggering numbers. The second quarter of 2020, we had 196 sales. This year we had 1,246, even comparing to 19. And again, you see, this is so valuable that we're looking at 20 and 19 together. So we give people the confidence that, hey, even comparing to a normal year in 19, we still had a 200% increase in sales. So, people are buying here in greater numbers. And, I don't want people to feel frantic about getting out and buying today, but if our buyers have the opportunity, have a down payment, certainly through working with Prosperity Home Mortgage, they can get a mortgage to buy something that will give them a comfortable place to live, plus will give them the opportunity to see appreciation. $500,000, or now we're at $1 million to $2 million. These are single family homes. Again, just focusing here on the months of supply and the number of sales. 272% increase in sales. Months of supply at 2.6 months. At this level, we say if we have 12 to 18 months, we're balanced. And now we have 2.6 months. So when those months of supply are at these levels, it's inevitable that prices are going to increase because you have more demand than you have supply. It's just that simple. I had a professor in economics my sophomore year, Dr. George Fiva, and he was. He could not stress more and more. It's all about supply and demand. So I may not remember a whole lot about economics, but I certainly remember that. And now I've seen it play out, in our business, these last many years. So I think that that is, the number of months of supply is what we all should continue watching. Okay, condominiums between $1 million and $2 million, again, 620% increase. We went from 76 sales a year ago to 547 this year. People had discovered that these values were so good that they started buying. And again, you see the months of supply in Miami-Dade is 5.7. Same thing over in Broward, 460% increase in the number of sales, went from 30 sales to 168. Number of months of supply, there's 4 months. So it is interesting how Dade and Broward do track each other pretty close. 2 million to 3 million, 556% in Dade, 267% in Broward. Months of supply in both cases are 2.4 months and 3 months. Median price, is up somewhat. When you get to this price range, you have to be a little bit careful looking at median price because we're not comparing with a lot of sales. I mean, last year, in this number of sales, we only had 32 sales. Last quarter, we only had 32 sales. So, it may be that we sold more expensive ones this year or this quarter than we did, the year before. So you have to be careful not to look just at the median price. I mean, we really just, need to do a market analysis on all 32 of those units to see what the proper value is. Okay, condominiums, again, big percentages, 561% increase in Dade County, 286% increase in Broward County, and 3 million to 5 million single family homes. Again, 390% increase, 630% increase in both counties. And then condominiums, 650%. These numbers, this is 5 million to 10 million, 383%. Who would have thought a year ago that in Broward County, you would go from 7 sales between $5 and $10 million of a single family home up to 32 just from one year to the next. And the same thing with Dade County from 12 to 58. And those were single family homes. Condos in Dade at this level are just over the charts. I mean, 1,600% increase. A year ago, we had 5 sales between 5 million and 10 million. This year, we've had 87. Again, this is not just our company. This is the whole industry. These are MLS numbers. Broward, they don't really have that level of condominium that we have, price level that we have in Dade County. And there are 18 condos on the market in Broward County priced over between $5 and $10 million. In Dade County, we have 204 priced between 5 million and 10 million. And then over 10 million, this is really the stratosphere. As you look at Dade County, we had 51 sales in the last quarter over $10 million for single family homes. And a year ago, there were 5. And right now, there are 109 on the market. So it's hard to believe that in this price range, we're kind of running out of supply. We have 8.3 months of supply in Dade County, and in Broward County, 16.2 months of supply. So, but Broward County, even though it's not as many numbers, it's significant increases. One sale over $10 million a year ago for the second quarter, and this year they had 6. And then in condos, over $10 million. I mean, it was one point not that long ago that we didn't have any condos over $10 million, and now we have 102 on the market in Dade County, and there were 28 sales, and 4 last year, a 600% increase. And again, in Broward, we start getting into the stratosphere. They only have 3 units at that price on the market anywhere. Okay, market data by city and county. Sherry, do you have any other questions there? Because I need to kind of like wrap up here. People are, I'm sure.
We do. And it's a variety of things. I know one topic that's come up a few times was just maybe touching a little bit more fully on affordable housing. And I know we're challenged by that. And another question, with all of what we're sort of seeing, are we expecting a period of increase in foreclosures and short sales due to the changes in the economy?
Well, I don't see any increases in foreclosures because we just have so much value built into these. Since the recession, our lending practices have been very strict. As you remember, right after the recession, it's going back to 09 and 10, it was not easy to get a mortgage. I mean, the requirements were much tougher. And even today, we have many more measurements that we can look at to judge the credit worthiness of a borrower. And so that's been very strong. And I just feel like we have so much equity in all of our homes. When we're in a period, especially if inflation continues at any level, we'll see values increasing. And generally during increasing value periods, people don't go into foreclosure because if they have to sell, then they can sell and still pay off a mortgage and move on. So I don't see foreclosures. you ask again about our workforce housing. This is a topic that we've discussed at our Chamber of Commerce, our Realtor Association. I mean, the only period that we were having anything positive to say about that was during the recession, when you could buy a median price home in Dade County for $150,000. To just kind of give you a rule of thumb, most buyers can afford a home of about 3 to 3.5 times their income. So if the median income is now $50,000, which is about what it is in Dade County, 3 to 3.5 times that is $150,000 to $175,000. Well, we've just seen that the median price of a single family home is now $505,000. A condo is not quite as much, but it's still twice what someone at a median income can probably afford. So our hearts go out to people that are at that price point. But there are programs, and this is what Jennifer was sending out that petition about. There are programs that, if our legislature will just allow some of these additional monies to be freed up, they will get into the hands of people who most need them. And of course, Habitat for Humanity, it does its part as well, helping people build their own homes with the support of the community. And, our company has for many years, built Habitat homes. And so, there are a lot of groups that are working to help that particular buying population.
I guess the other thing that we really haven't touched on is property insurance. And we are seeing some pretty nice hikes. And so how that may affect the market and making things affordable as well.
Well, yes, our insurance friends have all cautioned us about, these increases that we continue to see. And I think that is a topic that many people are certainly having to deal with, especially in more, in areas that are more prone to storms and flooding. It's more expensive. And I think that obviously the number of sales that we're making have answered that question for us already, because people that are buying these homes today and condominiums too, because their buildings are having to be insured as well. All that cost is baked into the price that we're selling for. So, I certainly I don't see sales stopping because of insurance. I mean, if we get to a point where there is no insurance, then that's a different story. But even during the tough periods of after Hurricane Andrew, our state ended up setting up Citizens to serve our state population, because we knew that we needed an insurance company to insure the properties that we were selling, or else, it would seriously affect, one of the largest industries in the state. So, we have a lot of people from the legislature to the insurance, industry, to our industry, with an eye on that. But, insurance is not going to get less expensive.
Okay, and I know you touched a lot on the rental market, but a couple of things about that is just like, what do you think would be a fair increase in rental price with existing tenants? And is there really any way to protect tenants from these crazy price hikes on their rent that's really presenting some new challenges?
Well, I would say if a tenant knows that they can stay in if they want to stay in their apartment or their home for multiple years, then probably the time to do that is at the beginning, and either to ask the landlord for an option to continue to lease at probably increased prices each year, but to go ahead and lock those in. I mean, if you're in a condominium on Brickell today that you might have been renting yesterday for, just pick a number, $2,500, and now it's $3,000, which is not uncommon what we're seeing. That would reflect a 20% increase in the cost. That's not every unit, but certainly, a 5 to 10% increase in rents has not been uncommon. And of course, each landlord looks at that objectively too, to say, well, you know what, I have a tenant and they're wonderful and they pay on time and they're taking care of my unit, and I don't want to gouge them, even though if I put it back on the market, I could probably get more. But then, every time you change a tenant, there's usually a month of vacancy in there someplace. I mean, many of them try to, put it all together as quickly as they can. But I mean, even a week, you're going to lose something but changing tenants. So I think there are other factors to consider more than just the rent. But I think to a tenant that knows that they want to rent for an extended period, probably should just go ahead and sign a 2-year lease up front. I mean, the landlord would be happy to know that they have their unit rented. But I think that those negotiations should really happen at the very beginning rather than after the market starts going up in value.
Okay, well, and I know a topic that's a big one, and I will tell you that we've still got, almost 230 people on the call. So I think a lot of what we're touching on today is very timely and helpful for our practices. So one of the big topics is obviously Surfside, and, really a couple of thoughts that have kind of come through the chat is, what impact do we anticipate on condo values and inventory on condos near Surfside after this collapse? And do you think it'll affect just older buildings or new buildings too? And will beachfront buildings be affected more?
Wow.
I know that was a loaded question.
Yeah,
and
I
that
know.
ties also into the recertification too, that, there's a lot of questions around that as well.
Well, I've gotten a lot of questions from reporters about this, and I guess the first thought I have is, this is such a tragedy, and it's been unbelievable to me how many people know people that were in that building, and we've had folks, within our EWM family that have relatives there, and so our hearts really go out to that whole group of people and their families. And our Coral Gables Community Foundation was one of the first groups to really step up to offer a vehicle to get gifts not gifts, but get funds to people who needed it the most. And our Coral Gables Community Foundation has already had over $5 million, I think, given just in this short period of time, that people that trusted the Coral Gables Community Foundation and the other partners that they had working with them on this, to take their funds and their gifts and to make sure those got into the right hands. So we should all have a comfort in knowing that that's happening right now. I mean, people have already received those funds, and there are other groups in town that I've read about in the paper that have done wonderful things to help that community. But at the same time, you look at the World Trade Center, and they're gleaming brand new buildings sitting on that site today. And yes, our memories certainly will never forget what people endured through that period. But I think the same thing will happen here. I mean, we obviously, as we just looked at these numbers, I mean, people are buying condominiums more today than they've ever bought. And I don't think that's going to affect the condominium market as a whole. I do think it's making all of us more aware of the condition of our buildings. Many people on this call, I'm sure, have investment properties that are in these condos, and every year when the budget comes along, nobody wants to raise their fee, and it's like, well, no, we don't need to put any more reserve money in for anything. But this, I think, will be an awareness now that we need to really seriously look at how well these buildings are prepared financially to deal with the things that we all deal with. I mean, if you have a single family home, your roof doesn't last forever. Your plumbing, electric, I mean, all these pieces, need some reserve dollars. And, the condominium law, certainly has a provision for that in the condominium documents when a building's brand new. But then when the owners take over, many times they just don't want to fund those fees or fund those costs through additional fees. And I think that buildings that have a higher percentage of owner occupants, have done a better job with that through the years. I do think that one of the immediate, byproducts of this, I guess, or byproducts from the wrong word, I guess, but just we're going to see higher fees. I mean, our boards of directors are going to say, okay, we do need to raise our fees and prepare for these in the future, because as buildings get older, they just need more help. The 40-year certification is something that most people didn't even know existed. But of course, this has been, good foresight that our county leaders had, years ago to set this up. And it's not just for condominiums; it's for office buildings. It's any building. You need to have it looked at just to make sure that it's not a fire hazard, other hazards, and it's just basically protecting the values of real estate that the county collects taxes on, just pragmatically speaking. But I think that we'll have a lot more discussion about what to do, who's responsible in the future for all these buildings. I think that it's probably not reasonable that a group of volunteers any longer can manage, a multi-story building. I mean, there's just too many facets to a building like that when we need professional help to and management companies to do that. And, I probably would be criticized by some by saying that, because I'm sure we have some small condominium associations with, 10 people, and they're fine and they're capable and they're doing great. But once you get to, 100 units and tall buildings and, problems with garages and settlement and all the things that can happen in a building today, I think that, we probably will see higher fees. We'll see more scrutiny. Certainly, when we're doing inspections, we're going to be inspecting a whole lot more than just the unit itself. We're going to be looking at the financials, or at least helping our buyers to lead the professionals, to inspectors, to look through those things to make sure that they're buying into something that is stable, and not only stable as a building structure, but stable financially. So I don't know, does that answer kind of?
Yeah, no, and I do appreciate, I think the one question that surfaced several different ways was just helping our people address, sort of what's gone on there with buyers and sellers and how to talk about it. Because certainly, one question too is these reserves you referenced and having to fund now, and what that could do to, values as far as, on both sides of that.
Yeah, typically, when you look at most of our condos that we're selling today, about 2%, of the value of the property, about 2% of the value is what we see in a homeowner fee. So if you have a unit valued at $1 million, typically we're seeing that the condo fees on that $1 million unit are $20,000 a year. And again, that's a really rough rule of thumb. But maybe even while you're listening here, if you think about the deals you're working on today, what is the annual amount of condo fee as a percentage of the total sale price? We have some condos in Dade County that are approaching like 4% of the value, and in really high-end buildings that are buying a lot of luxury, services in their building, then that would not be uncommon, and that would not affect value. But if it's a more modest building that's seeing a fee at those levels, then that will begin to affect the value of the unit as buyers at those levels. If you're buying a unit for $500,000 and your fee in that case is $20,000 a year, you're going to say, wow, I don't feel like if I'm going to have to pay that every month, then I may not want to pay as much for the unit itself. So, those questions are going to become more frequent now. And so it's even more reason why condo associations should get their buildings in order. So you don't have these large fees that are having to pay back loans for monies that should have been set in reserve by the owners 20 years ago.
Okay. Well, and I appreciate one comment is that very few condos actually fund reserves sometimes, and had they funded, maybe some of this work might have already taken place.
Yeah.
So.
Well, it's so much easier looking back than looking forward, but yeah,
sure.
I'm sure that there are many people that would have loved to have had this to do over, but I saw some of those articles where, the costs were substantial, $9 million one case, and then a few years later it was $15 million to fix some of these problems. And so rather than the best solution in the future, obviously, for any condominium association is to deal with it when you have to deal with it, rather than waiting until it just gets worse.
Okay. Well, there's a couple of more, but I don't know if you have any other.
Well, I tell you, I'm just gonna we're gonna hang up here in about 3 minutes. Market data about city and county. I just want you to see what these look like. They're very similar to what we just saw for the overall price ranges, but I'll just look at Miami-Dade County and Broward as a whole, and then I'll let you go back later and look at the various cities by yourself. But as you see, the number of sales of $1 million and up homes were up 40% this year over last year. But when you compare it to 19, we were actually a few sales less than we were last year. So again, this is in Dade County, but then you look at the over $1 million market, that's where, that was the under $1 million market, but then you look at the over $1 million market, astounding numbers, 349% across all of Dade County and all $1 million plus sales. And then Broward County, well, let's see, these are condominiums here, similar, what we talked about before, 648% of all the $1 million condos in Dade County, our sales were up 648% over last year's sales. And then in Broward County, those numbers were, also up in triple digits on the over $1 million market, but not as high in the under $1 million market because we just don't have the inventory that under $1 million market to sell. If we had more of that, we'd sell a whole lot more. And then condominiums in Broward County, same thing, triple digits. They have it on condominiums under $1 million and over $1 million. So, a lot of activity, and that will continue for the foreseeable future. And then now I won't go into all these, but these the Aventura market, single family homes, only 4% of the inventory in Aventura is a single family home versus condominium. But a lot of good information here that there's the Brickell market and so forth. So I won't go into all of these. The Brickell market, I talked about that a little bit a minute ago. Over on the right there, condominiums over $1 million. Last year there were 8 sold. This year there were 100 sold, 1,100% increase. So I would say that the new buildings that are being announced now in Brickell will probably have pretty good success with their early sales programs, even though those numbers are going to be at much higher dollars per square foot than we have historically seen. Okay, Sherry, I want to kind of go back to the beginning here, I guess.
Okay. The only question regarding a particular market was, do you see prices of single family homes in Coral Gables continuing to increase over the next year?
Yes, and okay, I'll do what I said I wasn't going to do. Here's a single family home in Coral Gables. Okay, Coral Gables under $2 million, sales are up 130%. Median price is up 28%, and over $2 million single family homes, sales are up 432%. So in the second quarter of this year, just in the city of Coral Gables, 101 homes were sold over $2 million. Last year there were only 19. And the median price of those homes is up 12%, but it's the under 2 million where you're seeing, that's where you have a lot more people that can afford to buy. A 28% increase in the median price. So of those 184 sales that were made last year or last quarter, the median price was $1,040,000. So certainly Coral Gables has many things that have created value there for almost 100 years. In fact, it's kind of interesting. I was looking at something that Arva Moore Parks had written. She's a historian that passed away last year, but she was a wonderful person to our community and a friend to so many people. And Coral Gables was where she had grown up, and she wrote a lot of great books about Coral Gables. And one that I had forgotten is that George Merrick, the city was incorporated in 1925, so it's not quite 100 years old. But in just a couple of more, 4 more months, in November of this year, actually November the 28th, was the very first day that George Merrick sold a lot in Coral Gables 100 years ago. So November the 28th in 1921 was the first day that he sold a lot in Coral Gables. And he had that sale, he operated it as an auction, and it was at the corner of Coral Way and Granada. Now, you know where Coral Way and Granada is today. Well, he already had that street carved out. It was probably gravel or dirt at that time, but he had 5,000 people at that intersection bidding for these lots. And what's even more fun is that there's a park on one of those corners. And about 20 years ago, maybe a little bit more than 20 years ago, it's when we started the Coral Gables Community Foundation. One of the generous residents of Coral Gables bought that lot. At the time, that lot was $390,000. He bought that lot and gave it to the city so they could create a park on that location where the first lot was sold. And it's kind of cool. But that family did a lot of nice things for the Gables. They're all gone now too, but I had the privilege of knowing them as well. But anyway, I just give you that last little bit of history about the Coral Gables market. But because George Merrick's plan has been maintained all these years, you just have a lot of people now that are benefiting from that. Okay, so Sherry, I think.
Well, we're really pretty well wrapped up. There was one question that's a little different. I know we've spent a lot of time on the single family and condo, but what about duplexes, triplexes, cap rates? We didn't really touch on that.
Yes. Well, that's a great question too. Many people are moving now, especially empty nesters. They don't want the maintenance of a big house, but they don't want to give up the square footage. So we're starting to see a real demand for 3 and 4 bedroom, even 4 bedrooms for sure, large townhomes all over. I mean, from Aventura to Coral Gables. We're working, as with Althea Row and Coral Gables, and our 2 most expensive units there that are priced over $4 million. Both have contracts now. And again, these are townhomes, 3 stories. They have 4-car garages, but this is what the new affluent buyer is looking for, with all the the new features of a brand new home and an area where they can walk to things. I think everybody wants to get closer to where they need to be, and so when they can be in an area where they can easily take the trolley, in the Gables case, and some of our other communities as well, the Brickell area. I mean, there are many ways now to move around for people, and I think the closer they can get to where they need to be, that's what they're doing.
Awesome. Well, this has been wonderful. And I know there was a lot of content covered. We did record it and we'll be pushing that back out. We'll also make the PowerPoint slides available as well. And I have to sort of maybe wrap up with Chris Zoller, who shared a thought. He says, "I'll never forget, over 20 years ago, Ron said to the effect that single family owners will be in Rolls Royces and condo owners will be in Mercedes-Benz. We just don't have any more land." So I thought, well, that probably sums it up pretty well.
Yep. Well, Greg Barnes would like to hear that. He's selling Mercedes over there. Okay. Well, thank you so much, everybody. And, we're very fortunate to be tethered to Berkshire Hathaway. We're the largest company in America now, selling more homes than anybody else, 940 houses every day across the country. Pretty amazing. We have some wonderful sister companies that we're now working with and have been for a long time. We've been a part of the Berkshire Hathaway family now for 18 years. And, it's certainly been a great benefit to us and to each one of us. So, but you're the glue that holds it all together. So thank you for all you're doing every day to serve your customers, because I know the kind of work that takes. I mean, this is certainly not an 8-to-5 job, but it's 24/7. But fortunately, we all enjoy it and we enjoy each other. And thank you again for all you're doing. Just keep selling. Talk to you soon.
All right, great. Thanks, everyone.
Thanks, Sherry. You too. And Lee, thank you so much for helping put all these pieces together.
Yep.
All right, back to work.